Hello and welcome to Energy Insights. Today we are looking to the global oil markets, recent developments, what OPEC Plus and ADNOC really signal to the world. So today's development in the global energy market are sending two very different but equally important messages. On one side, OPEC Plus is making a small adjustment to oil supply policy. On the other side, Abu Dhabi ADNOC is announcing a major long-term investment push worth multiple billions of dollars. Together, these moves tell us not just what is happening today, but how the global energy system is being shaped for the future. So let's analyze this recent development. OPEC Plus is looking for a small increase, but it's a message, and that message is big. OPEC Plus has agreed to raise oil production quotas by around 188,000 barrels per day starting in the June. The decision is reported by major international outlets, and it comes out after consultation among by the key producers led by the Saudi Arabia and Russia. At first glance, this may look like an increase in the global oil supply, but in reality, the impact is expected to be very limited. So what's really happening? To understand this, we need to look beyond the headline number. Number first, the increase is largely symbolic. Yes, many member countries are already producing close to their physical limits. This means that even if quotas rise on paper, actual production may not increase much in reality. Number second is the market is still shaped by uncertainty. As the global energy flows remain sensitive to geopolitical tensions, especially around the critical shipping routes like the Hormuz Strait, this keeps the market cautious and supports a risk premium in oil prices. And the third is that OPEC Plus is managing stability, not expansion. Instead of making a big production changes, the group is choosing small gradual adjustment. This helps avoid sudden price volatility and maintains coordination among the member countries. So what this means for oil prices? What does this mean for the consumers, businesses, and the global markets? In simple terms, under the short term, its impact is limited. This small quota increase is unlikely to significantly lower global oil prices. The market will remain tight, supply is still relatively constrained, and demand remains steady in many regions. Prices will stay sensitive. Instead of reacting to production numbers alone, oil prices will continue to move based on geopolitical developments, global economic activity, and supply chain and shipping risks. In short, OPEC Plus is not changing the direction of the market, it is carefully managing its stability. And in the parallel, there is another development that's from the UAE side, which recently made exit from the OPEC Plus, and its giant ADNOC, which has recently decided to further influx investment into its operations. A very different story, building for the future. While OPEC Plus focuses on short-term balance, ADNOC, Abu Dhabi National Oil Company, is taking a completely different approach. This company has announced plans to accelerate growth through approximately $55 billion in new project investments covering oil, gas, refining, and industrial infrastructure. This is not a reaction to today's prices. It's a long-term strategy to strengthen energy capacity and the global competitiveness. What ADNOC's investment really means? This is the question. This large-scale investment tells us three important things. Number one, confidence in long-term energy demand. Despite the global energy transition discussions, ADNOC is signaling that the oil and gas will remain essential for decades, especially in emerging economies. And number two, a shift towards a full energy integration. ADNOC is no longer focused only on the production of the crude oil. It is expanding across the entire value chain, from production to refining to petrochemical, capturing more value at every stage. And number three is the strong focus on energy security and resilience. By investing in domestic infrastructure and supply chain, the UAE is strengthening control over its energy system and reducing exposure to external disruptions. The big picture is that the two strategies due to these latest developments and the impacts on the one global market. So when we look at OPEC Plus and ADNOC together, a clear global pattern emerges. OPEC Plus is focused on short-term market balance, controlled production adjustments, and price stability and coordination, while ADNOC is focused on long-term capacity expansion, large-scale infrastructure investment, and strengthening future energy position. So the takeaway is that what this really means, the global oil market today is not following one single direction. Instead, it is operating on two different timelines at the same time. While in the short term, the supply remains carefully controlled, prices are stable but sensitive, and geopolitics plays a major role. While in the longer term, major investments are increasing supply capacity, energy infrastructure is expanding, and the producers are preparing for the future demand growth. To put it simply, OPEC Plus is carefully managing today's oil market, while ADNOC is actually building tomorrow's energy system. And between these two forces, the global energy market is entering a phase where the stability and expansion are happening at the same time, making it more complex but also more strategically important than ever. So this concludes our today's analysis, and thank you for watching Energy Insights. We will see you in the very next episode.